You are listening to chartingwealth.com for Friday, the 8th of May, 2015. We are looking at the charts where they ended. This is IYY that we are looking at, those of you who are listening to us. I will attempt to explain what I'm showing to those who are listening on or watching on the video. IYY is a total market index fund. We are looking at where the markets ended on Thursday the 7th. And what we see is the trend line that we drew a couple of days ago is continuing to hold. The market overall is going down. We had a crossover going down on the 2-day chart back on the 30th of April. It has continued to move down, pretty significant down movement today. We have the crossover on the MACD, that's the moving average convergence divergence, our really only big indicator that we use. The light red lines that you see in the background and the light green lines are the derivative oscillator. We see that also has moved over and going down. So we are in a downtrend currently on IYY, the total market. Now let's see what happened today on the 4-hour chart. We were looking originally at the half day. Now we're looking at the 4-hour. We can see that what happened was a little bit of up movement on the chart after a considerable down movement where the market just sort of held steady. Now you may have heard that the market was up 0.23% for Thursday, the 7th of May. What does that mean? Not a lot, considering that the market has been down 2.5 days prior to that, and we have a good trend line that's not being breached whatsoever. Nor do we have any closing movement in either one of today's 4-hour candles. It's anywhere near as much as the down movement was yesterday. So now let's range back out to the 2-day chart. And we're going to go to SPY, which is Standard & Poor's 500. Again, we're holding a pretty good trend line still. More down movement. Looks very similar, this chart does, to the total market. Again, SPY is an exchange-traded fund that tracks the Standard & Poor's 500, the big 500 companies on the Standard & Poor's index. We see a crossover going down on between the end of last week and the beginning of this week, right around the same time that it crossed over going down. It's always nice to see the derivative oscillator cross at the same time the moving average convergence divergence does. And it's moving through also the 30 and the 34 moving linear regression lines. We can see the price movement pushing through that. So we're in a down movement on the SPY. Let's range out to the 4-hour, and it looks again very similar. Some up movement today. You may have heard that the S&P closed up today, 0.40%. Well, that is not even 0.5%, and that move up is totally encompassed by just the down move from Wednesday afternoon, the 6th. So again, not much up movement. We are in a downtrend on the 2-day and on the 4-hour chart. 4-hour chart started moving down between the 4th and the 5th. And again, that's where the market is as far as the S&P. So we're going to range back out to the 2-day chart, and we're going to go to my favorite, that is the Qs, the NASDAQ 100. It again, same kind of position. It crossed over between the 4th and after the 4th. It crossed over going down. It is in a downtrend also below the 2-day trend line. We've talked plenty of times before about how to draw a trend line. Please go to chartingwealth.com. Listen to our training on trend lines. You'll get a lot out of it. You gave me nothing but a ruler and a pencil and candlesticks, which is what these green and red looking objects are, these rectangles. I would use that alone to try to chart where stocks were going and could probably do okay. So we see the moving average convergence divergence crossing over about the same time that the derivative oscillator did. So that's the kind of stuff we like to see to give us a good idea as to what's going on. We're looking at the 4-hour chart. It again looks very similar to what we saw with IYY, the total market, and SPY, the S&P 500. Of course, the Qs crossed over going down way back on the 29th of April and have continued to go down. Derivative oscillator also negative. That's where we are in the Qs, IYY, and where we are in the total market and the S&P. So now we're going to revert back out. We're going to look at our last. We're going to go from indexes to a commodity to gold, and look at gold continuing to go down. It has taken it a long time to bleed off that up energy. Gold started going up back on the 19th of April. It continued to move up, up, up. Nice big move on the 6th, around that 2-day candle on the 6th. And then what did gold do? We got a doji, which is a type of symbol that we recognize if you follow candlestick trading. I'm circling that area right now. That is very much a question, hey, what's going on? Whenever you see a cross, a doji, that is lots and lots of indecision. What did the market do? It has puttered around, going down, staying below the 2-day trend line that we have drawn the entire time. Although we have yet just today, check this out, just today, finally, after starting to move down on the 8th of April, it has finally, on the 15th of May, it has finally crossed over, going down on the 2-day chart. This is the one problem you will see with the MACD, the indicator we love. When you have markets that are sort of going sideways, the MACD is a hard one to use. But derivative oscillator flipped over, continued to stay over, and finally we're seeing a crossover on the MACD going down. Gold is now officially in a down move. Let's look at the 2-day, go from the 2-day to the 4-hour chart. And of course we can see the 4-hour has just crossed over, going down. It had been in an up. It's now officially crossed over, going down. So we have a confirmed down move on gold. That is where gold is at the finish of today, down to 113.49. So that is where gold is right now at the end of Thursday the 7th, going into Friday the 8th. Keep all those things in mind. We always love to have comments from you, to hear back from you, to hear questions, concerns, anything we can teach on, we're happy to do so. Again, remember, we are not a stock calling service. We do not give advice. We are about education. We hope that you enjoy this. This helps you think and helps you start going through a process on your own. We are chartingwealth.com. We appreciate you listening. God bless you and wish you the best of success in the market.